Has Bitcoin successfully started a rebound? If you're interested in knowing more about this, please keep watching. Let's first take a look at the long position I previously opened on Bybit. I'm still holding the position with a value of $750,000, and I entered at $28,500 for Bitcoin. However, as you can see from the realized P/L, the funding fees for this position have been quite substantial. I've already paid a significant amount in funding fees, nearly $5,500. After deducting the unrealized profits, this position now has approximately $40,000 in profit remaining. If you find this profit attractive and want to try trading, you are welcome to click the Bybit link below. By clicking the link and completing KYC with a deposit of $100, you'll receive an immediate gift of a $1,000 worth of Bitcoin contract position. You can choose to go long or short, and it will be set up for you instantly, no waiting required. I also encourage you to join my Discord or Line group. Now, let's directly look at the Bitcoin market. On the weekly chart, some members of our community have pointed out a potential bearish divergence. Do we have a bearish divergence? Actually, a bearish divergence, from a higher time frame perspective, like the weekly chart, has to be taken into account. We can see that the current uptrend can be divided into two segments. The first segment went from around $15,500 to $31,000, and the second segment started from around $24,000 until now. That's the second one. If we look at the MACD indicator, it separates these two segments quite clearly. Each segment corresponds to a different wave in the MACD indicator. For instance, we have one wave here, and another one following it. If the current uptrend is weak and quickly produces a bearish crossover, for example, as you can see, if in the upcoming market movement, the MACD line goes downward and crosses the signal line, forming a death cross, it may lead to a worrisome situation. We could see a bearish divergence on the weekly chart, where the price forms higher highs, but the MACD is trending downwards. This is a very unfavorable scenario. It's very, very unfavorable. Is this divergence valid? I believe it's absolutely valid. If it appears, it will be valid, because we have divided the uptrend into two distinct segments from a time frame perspective. The first segment experienced a pullback, and then the second segment continued the uptrend. If the second segment lacks sufficient strength, a divergence might emerge. In such a scenario, the current bullish trend would appear rather weak. However, as of now, we haven't experienced that divergence. To avoid potential divergence, the best approach would be to see a direct upward surge from the current point. This way, there won't be a divergence, and we can avoid worrying unnecessarily. Nonetheless, if a real divergence does occur, it is indeed a signal worth paying close attention to. The reason is that after the previous uptrend, we've been stuck in a prolonged period of oscillation, without an effective upward movement. At least compared to the previous uptrend, we've shown signs of weakening, which is undeniable. A strong upward movement is indeed needed to break out of the current period of oscillation. Otherwise, there's a risk of developing a bearish divergence. Now let's shift our focus to the daily chart. On the daily chart, we can still observe that we are oscillating within a box pattern. This box pattern, well, it has persisted for quite some time, and there have been multiple touch points, both to the upside and downside. Currently, we are positioned at the lower end of this range, and it has acted as support. So, we can deduce a valuable insight here. If one considers taking a short position, although I am not considering or holding any short positions myself, it would be wiser to wait for a confirmed candlestick closure below this range, or for a significant increase in trading volume during a downside breakout. This would be the ideal entry point for a short position. However, if the price appears to be on the verge of breaking down, but hasn't confirmed it, with a solid candlestick close below the range, or a notable increase in trading volume, it would be unwise to jump into a short position hastily, especially considering that we are still in the midst of an ongoing bullish trend, at least from the daily chart perspective. It's not the case on a smaller time frame, but that's what we got on the daily chart. We can observe that the subsequent downtrend has been somewhat feeble. As you can see, comparing this decline to the previous bullish moves, it lacks strength. Indeed, at this point, the demand has significantly weakened. And this is undoubtedly true. However, we haven't seen any significant increase in bearish momentum. In fact, during this entire white-colored box pattern, the bears haven't gained a substantial advantage. They haven't. The volume indicators clearly show that. Now, let's narrow down our focus to the 4-hour chart. Here, we can observe that the trading volume is quite feeble, giving the impression that there's not much activity in the market. Which is true. So now, we're breaking out to the upside from the box pattern below. If we switch to the 1-hour chart, we can see more clearly. We'll notice that we previously drew a trend line in this area, which looks like this. If it's broken, and now it has been broken, it at least diminishes the short-term risk of a sudden drop. I think it's unlikely that we'll experience a sharp drop in the near future. However, there's still a possibility of breaking below this range. Hence, it remains risky to go long at this point. As for my approach, I'm still holding on to my previous long position. However, I don't consider it an opportune moment to add more long positions or make a long call. There hasn't been a convincing signal to do so. Looking at the chart patterns, on the 1-hour chart, we can spot the formation of a potential inverse head and shoulders pattern. You can see that the left shoulder is formed here, followed by the head, and then the right shoulder. After the breakout, we indeed experienced an upward move, but it's currently being restrained by an S/or reversal level, which is quite obvious. Let's switch to the 4-hour time frame. Let's check out the 4-hour chart. And we plot the line. It's here. I reckon we can clearly see the price movement. The points where the price interacted with this line, whether from the upside or downside, are quite distinct. As we can see here, the line has acted as a support level in the past, and then it turned into resistance, support, and resistance. Now, it's acting as a resistance level. Encountering resistance in this area is entirely within our expected range of outcomes. If we want a favorable condition for the bulls, we need to see more continuous demand at this level, and a breakout above the white line I've drawn. Without that, there's still a significant risk for the bulls. Now, let's take a quick look at Ethereum. For Ethereum, on a slightly smaller time frame, such as the 1-hour chart, we can identify a potential triple bottom pattern. A triple bottom over here, as you can see. It's currently testing the neckline, and I certainly hope to see an upward breakout from this point. However, I haven't been paying too much attention to Ethereum lately, as the recent uptrend has been dominated by Bitcoin. Bitcoin's upward momentum has been stronger than that of other cryptocurrencies. Alright, thank you. You're welcome to like and share my videos and subscribe to my channel. Turn on the little bell button to show me your greatest support. Thank you so much. Bye-bye.